Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
Like and subscribe!
AI, staying bullish on leading healthcare AI play. This article was written by the software side of life. Summary: Tempus AI remains a resilient healthcare AI leader, with proprietary data driving traction and a clear buy opportunity amid recent volatility. TEM reported preliminary 2025 revenue of approximately $1.27 billion, plus 30% organic growth, and over $1.1 billion total contract value, supporting a robust, multi-year growth runway. 2026 guidance calls for 25% revenue growth to $1.59 billion, and adjusted EBITDA expansion to approximately $65 million, with management reinvesting two-thirds of incremental profit. At approximately 7.6 times forward revenue, TEM trades well below prior highs, offering attractive entry for long-term investors despite sector volatility and execution risks. Tempus AI, Inc. TEM has been one of the more resilient AI companies across the market. After a strong stock performance in 2025, the company is off to another great start in 2026, even as fears around an AI bubble grow. Tempus AI is one of the leading AI-focused companies in the healthcare industry. Adoption of AI technologies remains nascent. However, the company's proprietary data of personalized healthcare treatment suggestions is gaining traction. As seen in the chart above, the last few months of 2025 brought heightened scrutiny around AI valuations. Volatility in TEM shares is not unusual, and these periods of volatility often present great buying opportunities. I have long been bullish on the company, and my bullish thesis remains the same. For Tempus AI, I believe the buying opportunity right now is clear. Two key drivers behind the buy now thesis include recent positive commentary from the JP Morgan conference and the general improvement in AI adoption. Financial update. Although Q4 financials have not been officially reported, Tempus AI provided preliminary results during the JP Morgan conference earlier this month. This conference is often viewed as the golden standard for healthcare conferences, and I believe Tempus AI's showing is being underappreciated. Given some of the market fears around AI hype, I believe it was a very smart, proactive decision for Tempus AI to provide preliminary Q4 results. In fact, these results were stronger than some might have expected, with the company seeing a record greater than $1.1 billion in total contract value. For the full year, preliminary revenue is expected to be approximately $1.27 billion, similar to the prior guidance of $1.265 billion, and representing approximately 30% organic growth. Although not directly disclosed, management cited positive adjusted EBITDA for the full year, which was also similar to guidance. With Tempus AI now having greater than $1.1 billion in TCV, this should give investors additional comfort in the growth runway over the next few years. Management provided some commentary on the TCV trends, underscoring its importance and how this will help generate profitable growth in future periods. We announced last night that we have over $1.1 billion of total contract value in place. So this essentially is I think most people think of this like a bookings metric. It's the total value of the data licenses we have under contract to deliver in future periods. There's a small amount of this that's opt-ins, but the majority of it is just contracted revenue where they're just licensing our data and have to fulfill their contract terms. We don't include milestones or biobucks or any weird number in this. This is just real money, real cash. As a reminder, TCV is just a snapshot of the financial performance at the end of the quarter. This does not represent all of the revenue that will be recognized, but rather just the already signed deals. For example, in 2025, Tempus AI signed and delivered $100 million of revenue that was recorded in revenue. Given the company's revenue base of $1.27 billion, this represented nearly 10% of total revenue. With the company still experiencing strong momentum, investors should expect another strong year of in-period signed and delivered deals. Tempus AI also provided 2026 guidance, which included revenue growing 25% year-on-year to $1.59 billion and adjusted EBITDA expanding to approximately $65 million. Compared to the 2025 organic revenue growth of approximately 30%, this does imply a few points of deceleration, but this should be expected as the company continues to scale. What's more impressive to me is the pace of adjusted EBITDA expansion, essentially break even in 2025. Achieving $65 million would be a nice jump. On an absolute dollar basis, revenue is expected to grow approximately $320 million, and adjusted EBITDA is expected to grow approximately $65 million, representing an incremental adjusted EBITDA margin of approximately 20%. This margin expansion also includes the company's decision to reinvest 2/3 of incremental growth profit dollars back into the business. In my opinion, this demonstrates the company's optimistic view around the growth opportunity as well as how profitable the business can become over time. Growing platform and adoption. Like many industries, healthcare is still in the very early stages of adopting AI technology. Given the security protocols needed to protect sensitive patient data, the healthcare industry is likely to adopt AI at a steady pace. In fact, one could argue that Tempus AI's approach is superior, rather than being a horizontal provider of data. In other words, provide solutions to multiple industries. Tempus AI's focus on healthcare can give them a competitive advantage. Vertical AI companies typically have more domain expertise, giving customers higher levels of confidence. The long-term opportunity remains very large, as many healthcare processes are manual and mundane. As Tempus AI builds out its product portfolio and continues to win deals, traction should only build. As seen in the chart above, Tempus AI has spent several years building out its product portfolio across multiple disease areas. With the company's products achieving high efficacy rates, this can turn into a positive, virtuous circle. Management recently talked about the success they are seeing with the data. And as a result, if you look at like last year, I don't think I ever heard any one of our sales reps or leadership come to me at any point in time ever and say, "We didn't get a data deal, somebody else got it." Zero. So that's extraordinary. And I don't think great. I would much prefer they had better data businesses so we could collectively educate the market on how valuable this data is. But at the present moment, probably because we're a tech company at heart and a diagnostic company second, we've invested enormous amounts of money well north of $1 billion in amassing data and building tools that make that data useful. As mentioned above, the $1.1 billion in TCV is another indicator of growing AI adoption. The strong multi-year book of business is likely to grow from the Q4 levels, thus providing a strong base for revenue growth. In addition to TCV rising to the highest level in Tempus's history, the company reported net revenue retention of approximately 126% in 2025, demonstrating the continued expansion of relationships with existing customers, even at increased scale. With approximately 126% net revenue retention, according to the company, this is another proof point that existing customers are coming back and spending more with Tempus AI. In a traditional software business, approximately 126% NRR would be considered top class. For Tempus AI, I believe this is a demonstration of the company's product investments, acquisition history, and willingness on the behalf of customers to spend more on AI. Valuation. As with many AI-focused companies, one of the biggest pushbacks is often around valuation. Part of investing into emerging technologies is embedding some sort of hype premium into shares. Essentially, this is the investor confidence in the company's technology being able to translate into scaled, profitable revenue. For Tempus AI, the company has clearly shown their ability to grow organically and start to generate meaningful amounts of revenue. Valuation now sits at approximately 7.6x forward revenue. At face value, many investors would consider this to be expensive. However, this is a far cry away from the high point of greater than 17 times forward revenue in late 2024. One thing to consider is the growth trajectory of the business. Management just provided 2026 revenue growth of approximately 25% on top of material adjusted EBITDA growth. In a normalized environment, one that is not plagued by mixed AI sentiment, a company with these financial metrics would be trading closer to 10 times forward revenue. So yes, approximately 7.6 times forward revenue might not screen cheap, but one should consider the multi-year growth opportunity here. If growth can remain 20% plus for the next few years, which appears likely, then current valuation presents a great buying opportunity. Risks. One of the biggest areas of risk is around deliverability and future contracts wins. Yes, the greater than 1.1 billion in TCV is a great number, but Tempus AI still needs to deliver on these contracts. If issues were to arise with their products, this could cause significant contract cancellations. Although a low probability event, this would have a material impact on the business. Additionally, as Tempus AI continues to prove out its market fit, this could attract the attention of competitors. AI is a fast-evolving market, and increased competition could make new wins more challenging and potentially result in price concessions. Final thoughts. With the stock still down over 30% from its October 2025 highs, this pullback presents an attractive buying opportunity. Tempus AI recently provided preliminary Q4 results that demonstrated strong execution and customer traction. The inclusion of 2026 guidance metrics should give investors increased confidence in the growth trajectory. Tempus AI has carved out a niche position in the market, and I believe the company will grow into one of the leading healthcare AI companies. I believe the stock will continue to trade with high levels of volatility, which can make building a position challenge. Long-term investors should look to take advantage of future dips. This article was written by The Software Side of Life. Silver hits $100 per.
Hey viewers, like and subscribe to our channel. We'll keep bringing you more insightful stock analysis. It's going to be wild.